Hey traders, this is Trevor. It's Tuesday, June 4th, just after the close. A monster day for markets, up 2% across the board. Individual stocks rocketed even higher than that. Played a lot of those rallies with some awesome long calls today and some runners. I want to show you that because that is a key to at least my strategy and what keeps you getting paid. It locks in profits and you continue to participate in the upside. Great textbook examples of that. I'm going to show you that. Workday, Facebook, Apple, Twilio, that's what comes to mind. So I'll show you that. First, I want to show you, in full disclosure, we don't win all the time. That's why it's called trading, not winning. I had an SPX Iron Condor today that kind of ate my lunch, but I did so well on the long calls and the runners that it far offset the loss I took on the Iron Condor. So let's look at the Iron Condor first. This is today's 5-minute chart of the S&P. We opened up with about a 20 handle gap up this morning, fell back a little bit, and I opened an Iron Condor around 940 here. You can see I posted it. Opened this Iron Condor 2805, 2815, 2715, 2725. June 5, that's tomorrow's credit spreads that expire tomorrow. So this is a 1 DTE, 1 day to expiration trade. The goal of these trades are to close them before the end of the day and take really more of a scalp profit on the volatility crush that happens as extrinsic option premiums evaporate. That didn't happen today, but that's okay. Let me show you what happened. So open the Iron Condor. I got $2.20. I got $1.05 and $1.15 for each leg. Okay. Then at 10:40, I opened another one actually. So let's see. I opened the first one at 9:40. That is right here. So again, we opened up, backfilled, started to consolidate. I thought we might be done for the day. Then the next trade was opened at 10:40. So that is right here. We consolidated, had a leg up, consolidated back into the 10-day or 10-period moving average. And I thought, all right, well, maybe this is it. I turned out to be wrong, but that's okay. For that one, I got a $2.15 credit as well for both calls and the puts. The key is what happened at 11:50. What I want to show you is 11:50 right here. So we ran high up again. We just kept on chugging. At this point, markets are up probably 40 handles, 40 points on the S&P, something like that, maybe a little more. So what I did was I took the 2715s, 2725 puts that were obviously, in really good shape, well below current market price, and I rolled them up for a credit. So I brought in some extra money. Went from the 2725s, 2735, 45. Maintaining the Iron Condor structure, just moved the puts up a little higher. I was actually going to roll the calls then higher as well, so I was going to use some of this credit to pay for a debit to move the calls higher, but I ended up just closing them out completely because this market is just a monster. Anyway, so let me show you the math. Here's the important part. Open the 2715, 25 for $1.15, 2805 for 2815 for $1.05. This here is the roll up. So really for these puts, I got $1.15 plus 40 cents. I have $1.55 in the puts, $1.05 here. That gives me a total of $2.60 credit for the entire Iron Condor, right? At the end of the day, I closed, you can see here, I closed it, closed the puts for a 40 cent debit, which left me with $1.15 profit. And on the calls, I had to close those for $3.30. So I brought in $2.60, I paid $3.70 to close it, I lost $1.10. Okay, so what's $1.10 on a 10-point wide spread? Well, that's roughly what I look to make on a normal day. So I basically lost 1 day's worth of target profit. Does that make sense? Point is, I lived to trade another day. I didn't blow my account out, didn't blow up my capital. And that's what you want to try to do. Okay. So I do have this Iron Condor into tomorrow, the 28, 10, 20. Obviously super close on those strikes with the way the SPX rallied right into the close. It's actually why I kept it on, because I felt like it got a little frothy. We'll deal with that one tomorrow, and we'll play the hand that's dealt us. The really cool thing I want to show you is these are the runners that were opened today, or excuse me, the long options that were opened closed and runners left. Okay, so let's go back here where I can get a couple of these on the screen. We've got S&P here, we've got Facebook here, Twilio here, Workday here. And what I really want to do, I don't want to walk through all the charts. The point is, yesterday before the close, we opened SPY's 276 calls, okay? Bought them for 70 cents. Sold them on the opening this morning. I'll show you here. Sold them on the opening for $2.10. Leave a runner, okay? That runner that I still have in my account, I sold it for $2.10. The ones that I have left, though, are $4.69. They've more than doubled since where I sold them, which was a triple from where I bought them. Point is, this is what you want to do. You want to, when you trade the long options, you want to buy them, sell them, get your money off the table, and take some profit off the table. But leave a little bit because days like today happen. Boeing, we had 340 calls. Both the SPY and the Boeing were opened yesterday. The rest of these were open today. Boeing, 340 calls. I bought them at 315, sold them at 510. They're now worth 633. And when I say now, I'm talking about as the close. And here's where I posted that: 510, 315. Leave a runner. It's now worth 633. Let's see here. Workday. I bought the 192.5s for $3 right here. Let's see, where did I close? Workday, selling them at 470. They're now worth 533. Twilio, so every one of these we left a runner. Twilio, bought at 263, sold at 345, now worth 396. Apple, 180. I had Apple and Facebook from yesterday. I added to them today during today's trading. You see right here at 10:25, Apple and Facebook adding to both existing positions. The point of this I just want to make is, we had an awesome day trading long calls, right? Just these profits by themselves are huge. But then you keep these runners, you keep that exposure to play for the upside or further upside. This is free money. So I kept a little bit of the profit that I made on this trade in the trade, and that profit has now doubled more than in this one. It's up, another $1.50 here, up another 50 cents, up another 40 cents. And so this is free money. These are all June 7 expiration, except these SPY calls. Those are tomorrow, June 5. But the rest of these, I will probably hold through the end of the week because the market seems like it really wants to go higher. And this is, again, I don't want to call it free money, but it's profits that I've already taken, and now I just continue to play for the upside. So I hope that helps. Hope you guys had an awesome day today as well. And you know what we do. Tomorrow we'll be back doing it again. Thanks.